Chapter 32, the use of financial documents. When talking about financial documents, we're talking about business documents. Okay, so just scroll down. Using financial documents to assess the performance of a business. One of the main reasons why businesses produce accounts is to assess business performance. A number of stakeholders may be interested in the statement of financial position and statement of comprehensive income. However, their interest may be for slightly different reasons. So, we have stakeholders. Stakeholders are those group of people who have interest in the day-to-day running of the business, in the business activity. But their interests are slightly different from one another. So examples of stakeholders, we have employees, the managers, the investors, the banks, the customers, competitors. A lot of them are there. So all of them, they have different need, they have different interest in the business, on the business. So, but we have to understand that in as much as they have interest in whatever the business does, it means they are stakeholders. Clear? So let's check. They said managers and employees. What are the interests of managers in the assessment of the performance of the business? Managers will want to assess the performance of the company. The profit made by the business will be a reflection of their own performance. For example, if the company does well, they may be in a position to ask the owners for higher rewards. Managers might also make comparisons with competitors to see how their performance compare with that of rivals. Managers might be more motivated if they see that their company is performing better. For managers, they are the ones that are in charge. They make decisions about the day-to-day running of the business. Yes or no?
Yeah.
So what is their interest in the performance, in assessing the performance of the business? Their interest is because whatever happens to the business, it will be measured. It becomes a measure for their own success or a measure for their own performance. So a business has to do well. So for managers, they want to see the business doing well. They want to see the business doing well. So if the business is doing well, it means they are performing well too. And that could help them to be able to, to ask for more in terms of reward from the owners of the business.
The owners will ask more.
The managers will ask for more rewards. Rewards from the owners. The managers, they are not the owners of the business.
Yeah.
They are just there to make decisions about day-to-day running of the business.
Sure.
These are the managers.
Rewards for the employees, right?
What?
Rewards for themselves and the employees, right?
They make decisions. They coordinate, they direct, they organize employees on what and what not to do. But what we are saying here is, why do they have to assess the performance of a business? For managers, better be here please. For managers, the performance of the business is important to them because if the business is doing well, it simply means they are performing well.
Yeah.
And if they are performing well, it becomes a way in which they can ask for more reward from the owners of the business. If the business is doing well, so the owners should pay them more. They could ask for more. That's the point I'm making here. Sure. And also for managers, they can also use it to compare their business with those of their competitors. So they would be able to know that, oh, if our business is doing well, that means I as a manager, I am better than the managers of other competitors, or the managers of our competitors.
Competitive in a business.
Your competitors are those that you sell almost the same products with.
Yeah.
These are your competitors.
Sure.
So your manager, the managers use competitors. They measure, the managers, they measure. Please, try to get what we are talking about. They are talking about using financial documents to assess the performance of a business.
Okay, sure.
When we are measuring the performance of a business, it simply means we want to know how well the business is doing.
Yeah.
To know how well the business is doing, we cannot only base it on one perspective. It has to be on different perspectives. That is why we have different stakeholders.
Yes.
So different stakeholders will come up with their own interest. Why do we call them stakeholders? We call them stakeholders because they have interest in the business activity. So one of them is the managers and the employees. They work in the business. The managers and the employees, they work in the business. Yes or no? Good. So why, now we start with the managers. Why do they have to assess their performance? Why do they have to assess the performance of the company?
Why?
they need to assess the performance of the company, because the company, if the company is doing well, it becomes the measure of their own success. So if the company is doing well, it means whatever decisions they take or they make was positive, has impacted positively in the business. Do you get what I'm saying here?
Yeah.
For managers, they make decisions about the business, right? So if the business is doing well, it means the managers have taken tangible, reasonable decisions that has helped the business to shine. Do you get it?
Yeah, sure.
So if the business is doing well, it means the managers are doing well.
Of course, obvious.
So this also allows the managers to ask for more from the owners of the business. They can also use it to compare those of their competitors. So they assess the performance of the company because they might want to ask for more in terms of rewards, and they might want to know how well they are doing compared to those of their competitors. Is it clear? Is it clear, please?
That's what managers will ask.
Yes. Now, employees also work in the business, right? Employees might need financial information during wage negotiation. Information about profit and the prospect of the business could be used to decide whether it can afford to meet a wage claim. For example, if the statement of comparative income shows that profits have increased significantly, employees will be in a stronger position to demand a wage increase. They may also look at accounting information to see whether their jobs are secure. For employees, they want to assess the performance of the business too. Why? Because of two things. The first one, they want to know how profitable the business is. If the business is making much profit, it means that they can make a wage claim. They can ask for more wage claim, like they want increase in their wages.
They want more increase.
They want increase in their wages. That's what we call wage claim.
Okay.
This will be as a result of finding information that the business is doing well, the business is profitable.
Okay.
So it helps them to tender their wage claim, to support their wage claim. That owners of the business pay us more. Managers tell the owners to pay us more. The business is doing well. Look at the profit the business make this year compared to last year. We need more. We need increase. That's the first thing. The second one is the business, the employees. They might also check the financial position of the business to know if the business can still survive after now.
They want the business to survive.
They want to be sure that the business can still survive after now. So they can only get that through information in the statement of financial position. So they want to know if their future is secured. If the business is unable to pay, if the business is not liquid, if the business is having cash problems, they'll be able to know through financial statements. If the business is having more liabilities, they'll be able to know through the financial statements. So that allows them to know. That makes them to know if they are supposed to stay or to find their position in another company.
Sure.
This is for employees. Is it clear?
Yeah.
That's for managers and employees. Why they need to assess the financial the financial position or the financial document of the business. Now, owners and shareholders. For owners of small businesses will obviously be interested in the performance and the financial position of the business. Owners of the business, they need to know because they want to return on their investment. Yes or no? They want to see how their assets are growing, how their liabilities are reducing. They want to see how much revenue they are making compared to the last year.
I don't get it.
Owners of the business. These are the owners of the business. Why do they have to check? Why do they have to assess the financial documents of the business?
Why?
They have to assess it because they have put their money into the business. So they want to know if the business is doing well or not.
Yeah, sure.
If it is worth putting more money into or not. That is the point there. So they need to assess if they are making more, if the business is increasing in terms of assets, if the business is increasing in terms of revenue, if the business is improving in terms of profit.
Sure.
If the business is not having more debt as it used to have. This is the interest of owners of the business. Is it clear? Is it clear now or not, please?
Yeah, clear.
Then the shareholders, they have invested into the business. They've put money into the business, yes or no? They want return on investment. They want higher dividends, yes or no? So why do they want higher dividends? Because higher dividends means that the investment is yielding positively. That means there's positivity, or there's a positive impact of their money into the business. So they need the financial document. They need to check the statement of comprehensive income of the business, which analyzes the profit made by the business, because it's through the profit made by the business that their dividends will be paid. Are you with me, please? Shareholders have interest in the business because they want higher dividends, which is the return, the share of their profit, the share of the profit. And where do they get the share from? The share of profit from the statement of comprehensive income, which is a financial document of the business.
Yeah.
So they want to monitor the profits of the business so that they can claim higher dividends. Is it clear? Or so that they would know if the business is paying them the right dividends or not. They wouldn't want the business to cheat them. Clear?
Clear.
The third one, external stakeholders like banks. Banks need up-to-date financial information when deciding whether.
Wait, banks are also.
They are stakeholders, yes. You might take money from them. You might want to take a loan from them.
Oh yeah, sure.
Yes or no? So if you want to take a loan from the bank, they need to check your financial documents, if it's worth giving you a loan or not. Clear?
Okay, sure.
Suppliers, these are the businesses you buy from. Yes or no?
Yeah.
They want to be sure that you are credit worthy. How are you going to be? How are they sure that you are credit worthy? They want to be sure that you don't have a lot of trade payables in your statement of financial position. If you are having a lot of trade payables in your statement of financial position, it means you are owing a lot of suppliers. They wouldn't want to sell to you. Clear?
Yeah, sure. Clear.
Okay, so we move down. So we have using financial documents to inform decision making. Are you there?
Using financial documents
to inform decision making.
Okay. Sure.
Are you with me?
I'm with you.
Now we go to using financial documents to inform decision making. Businesses will make better informed decisions if they have access to financial documents. Since financial documents contain quantitative information, when we talk about quantitative information, we're talking about information that are numerical, figures, values. They can be very helpful in decision making process. For example, managers may need to up-to-date financial information to help run the business and make key decisions such as funding decisions. Access to relevant financial information
before funding decisions, say it again about the first one.
Quantitative information.
Yeah, what is
quantitative information? Information that involves numerical figures, values, numbers.
Values.
Numbers.
Okay.
So, why do managers need informed decision making? They need to have access to financial documents. So that allows them to take decisions or to make decisions about one, funding. When we talk about funding, that's talking about putting money into the business. Do we have to put more money or not? These are funding decisions. And how can a manager decide that? A manager can only decide that if he or she has access to those financial documents. I read. Access to relevant financial information can help to predict when more money will be needed by a business. For example, details of current assets and current liabilities can be used to calculate liquidity ratios to see whether the business needs to raise short-term funding to boost working capital. Also, if the business is planning to expand, it can use the statement of financial position to see which type of funding might be most appropriate. So literally, managers need to make decisions about finance, funds, when they need funds, when they don't need funds. And this decision can only be made if they have access to the statement of financial position or the statement of comprehensive income. Is it clear?
No.
Funding decisions is about making money decisions.
Making money decisions.
Finance decisions.
Okay, sure.
Finance decisions will be based on if we need finance now or not.
Like how?
For example, you'll be able to predict if the business will need money in the next few months or not.
Like cash flow.
Yes. So you'll be able to know if the business will need money in the next few months or not. If the business is going to need money in the next few months, are you with me, please?
Yeah, I'm with you.
If the business is going to need money in the next few months, you'll be able to plan ahead. In case there's no money that is coming through, then you should be able to know if you have to take a short-term or long-term finance loan. That is funding decision. Not only that, the business might want to expand. To expand, you need a lot of cash. Yes or no? The
Yes.
business you need access to your financial position to know if you have enough liquidity or not. Reducing cost. It is also important for businesses, for managers, to make decisions about cutting cost. And how are they going to be able to make decisions about cutting cost? They need to have access to information. A business might use the statement of comprehensive income to analyze cost. For example, by comparing the gross profit margin and the operating profit margin over a time period, a business can assess whether costs are under control or not. So managers need to make decisions about cutting cost. And to make decisions about cutting cost, they need the statement of comprehensive income, where costs are being incurred. So if you have to reduce cost, you have to reduce cost through the items.
To the items.
Through the items in the statement of comprehensive income.
Make everything cheaper.
Whatever. Just ensuring that cost is reduced.
Yeah, sure.
That is still why managers might need to make decisions about cutting cost. And if they have to make decisions about cutting cost, they have to do it through the statement of comprehensive income.
It's the same with the funding, but it's the
not.
opposite.
For funding, you might need your statement of financial position.
Yeah.
For cost, you would need your statement of comprehensive income. It's not the same. Increasing profitability. It will be possible to use the accounts to help find ways of making more profit. So here you would need
they make decisions about to increase
how to make more profits. This can be done through the statement of comprehensive income. To make more profit, maybe they need to increase the prices of their products, or they need to reduce. They need to find cheaper suppliers. Are you with me, please?
Yeah, I'm with you.
Investment decisions. Investment decisions are risky and uncertain because a business can never know for sure whether an investment project will generate returns in the future. So the future is very difficult to predict. However, information in financial documents might help managers to assess whether a business is strong enough to take risk.
I don't get it.
Yeah. Investment means putting money for the future, right?
Sure.
To predict about the future is not easy. Yes or no? But for managers, because it is risky to invest for the future, right? Are you here with me?
Yeah, I'm with you.
It is risky to put money into a business.
Yeah.
On what you don't know, you cannot predict what you cannot, what it's 1/2. So, for managers, because they have access to information, financial documents, they can assess it to know if the business has the financial capability to take the risk. It's about taking risk.
Yeah.
So for you to take a risk as a business, the manager has to decide about that. So if we have enough money, then we can take the risk. Oh, we don't have enough money right now, we can't take this risk.
Yeah.
That is about investment decision. Is it clear?
So basically, if the business has the
financial capability to invest for the future, they will. Through having access to financial information and being able to assess the information.
And they can make risks.
They can make decisions about taking the risk or not. Government. Many government gather business and financial information. This is made available to the public. Some of the data is taken from accounts. The government uses the information to monitor the progress of the economy and help evaluate the success of its economic policies.
How?
Governments take charge of the country. Yes or no?
Yes.
So what do government do? Government, they try to use financial information to know if the economy is doing well or not.
Through business.
Yes. If businesses are doing well, it means the economy is doing well. And this will be as a result of government decisions, government policies. So government are in charge. Government take charge. We have legal control. Yes or no?
Yeah, sure.
So if businesses are doing well, despite legal controls, it means government policies are making positive impacts in the economy. So government can use financial documents of businesses to measure the performance of the economy.
Sure.
Clear?
So they make so if they know if the government knows that the financial the economy is actually going up, they check the business.
Yes, because the business gives them the response. The business gives them the response. Clear? the competitors. Limited companies' accounts are available to the public. Therefore, competitors can analyze them to make comparisons. For competitors, why do I need your financial documents? I need it to compare mine to see if I'm doing well than you. Clear? Is it clear, please?
Clear.
The media, they need to publish. They need to publish information to the public. That is what they sell. They sell news. Media sell news.
Yeah.
So, how do they get the news from? They get news from financial documents of businesses. Is it clear? Tax authorities.
Sure.
Tax authorities, they need financial information because they need to charge profits. They need to charge tax based on the profit made, and profit is part of your statement of comprehensive income. So for tax authorities, they cannot charge you the right tax without knowing or having information or being able to access your profits through the statement of comprehensive income.
Sure.
Do you get it or not?
I get it.
Are you sure? If not, let me explain again.
I get it. Yeah,
Okay.
I understand.
Auditors. Why do auditors need our financial documents? Auditors are those that check the accuracy of what we do. They check the accuracy, of what we do, the records we give, the financial documents.
That's the business.
Auditors are people that check how accurate the financial information that we have given are. We prepare financial information, right?
Sure.
So auditors are those ones that check if they are right or wrong. If there's any fraudulent act in the course of preparing those financial documents.
Sure.
Is it clear?
Like these people are.
The audit.
The audit.
They check. They check the accuracy.
Like who actually are they? I know they check, but
who are they?
Yeah.
They are external bodies.
External bodies.
They are not part of the company. The company calls them.
Oh.
The company invites them to check.
Okay, sure.
If the accountants, the financial information about the company is right or wrong.
Okay.
Is it clear?
Yeah, clear.
They are experts. They are specialists.
So they are
Example KPMG.
They are experts of checking if the
accuracy of the financial documents
accurate it is.
of a business. Clear.
Sure.
They're the registrar of companies. The registrar of companies are those that allows you. They are the ones that makes you to be able to become that. They are the ones that allow you to become incorporated. Registrar of company. We talked about incorporation.
Is it from like the business?
From a partnership to become a limited liability company. For you to become a company, you have to go through the registrar of companies to provide them with your memorandum of association and the article of association. We talked about it.
Yeah.
So the registrar also, you have to submit your financial accounts to them every year.
Really?
To monitor if whatever you have given them in the MOA and AOA are still intact. You know, you give them your MOA and AOA.
I give them it like every year.
They want to be sure that things are well done. You have given them your MOA and AOA. That was the reason you were incorporated.
Sure.
You become a public or private limited company. So you have to provide them because the AOA and MOA is with them.
Yeah, sure.
So every year that passes by, whatever you do, they need to check based on what you have given them in terms of documents, if you are still in line or not. Is it clear?
Clear.
So that's about financial documents and its uses. Any question about it? No.
No.
So we go to multiple choice question now.
I think I have a question.
Yes, please ask.
Just give me a minute. I found it. Exercise duties.
Excise duties.
Yeah.
It's a form of tax.
Mm.
It's a form of tax
It's a form of tax.
that you have to pay to government because you have brought in goods.
It's another name of tax.
It's a form of tax.
It's
A
a form.
form of tax.
It's a type of tax.
Yes.
Oh, okay, sure.
Is it clear? I'm with you.
Yeah, I'm just wanna find something to ask. Okay. Wanna ask you something, Mister.
Yes, please.
So, when you give something to the, financial documents and stuff, for to the public,
Okay.
like in the medias or anything else.
I can't get you, please.
Okay. I said, what like is it? Does it really matter to release it to the public? About the
Financial documents.
Yeah.
If the company,
Apart from like competitors and governments and whatever.
the
Like,
media. Are you talking about the media?
Yeah, I'm not talking about the media. I'm talking the general public. Do they matter about the financial documents? Do they care?
They care, because
Really?
part of, especially, you have to publish your financial statement if the business is a private limited company or a public limited company,
Mm.
especially a public limited company,
Mm.
because you've sold your shares to the public.
Ah.
They need information. How are they going to be able to access information when you are keeping information?
Mm.
How are you going to be able to convince them to invest more?
Sure.
You want to sell more shares, right?
Mm.
To sell more shares, they need to trust you.
Ah, yeah. Mm.
Do you get it? So
Sure.
financial information can't be kept away from the public,
Mm.
especially if you are a public limited company, because the public are the ones that have invested into the business. They are the shareholders.
Understand.
Is it clear now?
Sure.
So can we go to the multiple choice question now?
Okay, yeah, yeah.
All right, question 1.
Okay. Question 1. The owners of a business may use financial documents to assess a company's. What's assess?
Assess.
Yeah. To assess.
Measure.
Measure. Okay. To measure the company. A. Current assets. B. Profitability. C. Market share. D. Cash flow position.
The owners of the business, what's their interest?
Market share.
Owners of the business.
Hmm?
The owners of the business, what's their interest in measuring the performance of the business, in measuring or in assessing the financial documents? Owners of the business. Why?
Market share. Oh, yeah. I'm sorry. It's B. Profitability.
Profitability.
Yeah.
Owners.
It's profitability. Yeah.
Please, when you are doing your exams, you need to take time. You need to take care.
Mm.
Don't just choose answers. Read well and understand, please.
Sure.
Please. Question 1 is what? B. Question
B.
2.
Okay. Number 2. A bank may use a company's financial documents to help assess. Okay, this is not from owners. This is from a bank. Okay. A. Labor turnover. No, I don't care about it. B. Growth potential. C. What? What is
Creditworthiness. Creditworthiness.
this? Is this a mistake?
No? Creditworthiness.
What is this?
The ability to pay back.
The ability to pay back for the creditors, right? Oh,
The
yeah.
ability to pay back.
Okay.
That's creditworthiness. That means you want being given a credit.
And D. Product quality. Yeah, it's C.
Creditworthiness.
Yeah.
Good. Question
The
3.
ability to pay back.
Question 3.
They will not care about labor turnover or product quality. Like I don't think a bank will care about the product quality. Okay, number 3.
I think.
Couldn't see.
Wait.
Is it wrong?
Yeah, it's fine. It's right.
Oh, okay.
It's right.
I mean, growth potentials for like companies, not really for bank. The authenticity.
The authenticity.
Like what is it?
Authenticity. Authentic.
How accurate?
How accurate? Yeah.
Ah, okay. Of financial documents is checked by A. Suppliers. B. Shareholders. D. C. Auditors.
Auditors?
Auditors.
That's the answer.
Yeah.
So the authenticity of financial
That's
documents.
that's their job.
The authenticity
They,
of financial
yeah, they will
documents.
check the authenticity. How can I say authenticity
Yeah.
of financial documents?
So the authenticity of financial documents is
accurate?
checked by the auditors. Question 3C. Question 4.
I don't think local authorities will care about it.
Local authorities might
Our
think
people.
about.
Our people.
Local authorities might think about tax, and they're even tax authorities. So
Yeah, I don't think they will care
the
about.
community there, they might care about the community.
Number 4, financial documents might be used to help a business make decisions about which of the following.
Financial documents, yes.
Okay, might be used to help a business make decisions about which of the following: A. Funding. B. Marketing strategies. C. Remunerations.
Remuneration methods.
Yeah, you already explained about it. D. Effects of changes in exchange rates of the business.
So what was financial documents used for by a business in making decisions on what?
A. Funding.
Funding decision. So the
Yeah,
answer
funding.
is A.
Yeah,
Question
there's
4 is
funding.
A.
There's cost, like cutting costs. There's many financial things.
Expansion.
Yeah, expansion. Remunerations is other thing.
That ends chapter 32. Is it chapter 32? Is it chapter 32?
Let me check.
Yeah, chapter 32.
Yeah, chapter 32.
The use of financial documents.
Sure.